In this video, I'm going to be documenting exactly how I trade the first pullback with the blue alerts, and I'm going to show you my rule-based system and how I skip most trades and how I have a very high win rate. So just for proof that this actually works, I'll show you that I pass an account, and I also have an equity curve so you guys can see that I am pretty consistent with this. And I'll show you that this week I did trade it, and I was on another account that I'm about to pass, and I had 1900 profit in 2 days. So I'll explain each rule individually, and then I'll show you some examples. So first, settings. You want to have your candles on Heikin-Ashi. So as you can see, you have different candle types, and the first one is regular candles and Heikin-Ashi. You want to select that. So you want to have a first pullback with a double blue. Oh, and you also want to have your high time frame confirmation be on the 5 minutes. So this will be in your alert settings. You can change it to the 5 minute. I also want to start with another rule that is at the bottom, but it's this, which is enter when price first pulls back with strong and close structures. So you can see that we have a first pullback and we have nice structure that is pretty strong, rejected multiple times, and it's close. The other rule, you want to take a double blue or a normal blue alert. No blues in the middle of the trend. So this is a normal blue, and it would be a double blue if this 5 minute would be on the same candle as the alert. So that's a normal blue. And then you don't want to take anything in the middle. So you can see that you have a trade that's here, you have a buy, and you have another buy. You don't want to take any of these. You want to take only the first pullback. If a trade is printed a normal alert, don't take it. So this is a blue alert, and this is a normal alert. You only want to take the blue ones. So the first pullback must be clean, and it can't react off of a level and liquidity point. So as you can see, this trade right here, it reacts off of a strong liquidity point. You see we have a prominent low right here, and we just bounced up, and then we made an alert. So you don't want to take that because it bounces off whatever you could call it, level, structure, liquidity point. We wouldn't want to take that. If we had a pullback that went up to here, which is a very strong point, and then we had another alert, you wouldn't want to take that because we bounced off of that. But with this scenario, we have nothing that we're rejecting off of that's pretty prominent, and we have an alert. First pullback cannot exceed 2 times the length of prior structure's pullback. So we have this kind of leg right here, and then we have a pullback that's about this length. So you would typically want these different lengths. You want the second one, this pullback leg right here, to not be extremely long. So you usually don't want this to be crazy high, and you don't want it to be super short and choppy. So the first pullback of a trend prints an alert that wasn't blue, don't take the next. So if we have a sell here and wasn't blue, you don't want to take a sell that could be here because this one wasn't blue, so the next one, it won't be valid. So if this one, for example, if this buy right here was a regular alert and it wasn't blue, you wouldn't want to take a buy that's right here. You see, if we have a sell right here that is not blue, you wouldn't want to take a sell if we go like this and then have another pullback. You don't want to take that. The first pullback doesn't make a higher high with structure, don't take it. So this trade right here works because we do make a higher high, and that's the only part that works. It is pretty invalid, but we did make a higher high, so I would be looking for a buy, but possibly around here, but we didn't get an alert over there. So if we didn't make a higher high, it would look like this. So we have structure, and then say we have like this, and then we make pullback. You wouldn't want to take a blue right here. It has to make a higher high like this. The pullback is choppy, don't take it. So this is a very choppy pullback. I want a strong pullback. For example, this is a really strong pullback. It's not choppy. And then the previous trend must be extended, and the opposite 5 minute high time frame arrow must print before entry. So this is one of the most important rules I have. So if we have a buy here, you don't want to take a buy here or buy here. You only want to take the first one, right? And the reason that you would want to take a buy here in the first place is because we have a sell. So once we have a sell, I'd only be looking for buys because that means that we're still going to go down, but it's not the first pullback. So anything over here, if we had more sells, I wouldn't want to take. So after this sell, I'm only looking for a buy. And we do get the buy, but it's invalid. We have another buy right here, buy, still want to take that. It's in the middle of a trend. And then we still have another buy right here. And this is invalid because we don't have a sell over here. So to have a buy, you need a sell, and to have a sell, you need a buy. So we have a buy, so I'm looking for a sell. Looks like we didn't get this or an alert on the first pullback, so I wouldn't take anything. But another example of why you wait, because we don't have a blue alert here, and it does say high time frame, but we never have a blue alert on the Heikin-Ashi. And we have a sell here, it goes straight to stop loss. So does this one, so I'd only be looking for buys. Now we have a buy, I'd be looking for sells. Price may wick the EMA, but must not fully close beyond it on multiple candles. So we can see on this scenario, we wicked the EMA, and then we went down. But we have, on this one, we have multiple candles closing above it, so I wouldn't want to take that. Wouldn't even want to take it anyway because we don't make a lower low. The RR from your stop loss to your first 50% TP cannot be under a 1 to 0.75 ratio. So this is a great example. So right here, we have close, strong structure, and we have a decent stop loss. So the reason it's decent is because we have really strong liquidity right here. We can put it just beyond it. We also have this structure, and we have this structure protecting us. And our first 50% TP would be at a very obvious liquidity point. You can see this is very obvious. We have multiple rejections. You can see it's nice resistance, and you want to put your first TP right at the high. You can see you hit it, and the ratio is a 0.91, which is very nice. And then another reason you wouldn't take this buy is because your stop loss would have to be, if you at least put it there, you'd have to take TP at an obvious level. This is a pretty obvious level, and that ratio is 0.57, which is not very good. So you wouldn't want to take that. So we already covered this one. And stop loss exactly under a low or a high, be mildly generous to let the trend play out. So this is mildly generous. We have in this area, and we let the trend play out because we rejected off of this. And you can see we just let it happen. We go all the way up. And then a good example for trailing is this trade too, because you start to trail your stop loss once price strongly breaks the pullback you entered on. So we have a pullback we entered on, and you say we strongly break it. We get 50% TP. So you'd start to trail. You wouldn't go directly break even. So you would get break even if you went at this point, right? But if you trail instead below all of this, if all of this you can target at this top liquidity. So you put your TP at the obvious liquidity point that's very high, and you can just let it run. So you could even take partials when we go up and reject off of this, and you have a MACD. But if you wanted to, you could just hold it and you would still get it. You can see we even go higher. And then another reason why runners should be trailed, not gone directly break even. You see we got break even. We wouldn't have hit the 1 to 4 or whatever it is. And then full TP at obvious liquidity point. Very obvious right here, and then very obvious right here. So either or you can take TP here. All right, that's basically all the rules. If you have any questions, DM me, let me know, and I'll try to answer them. But I want everyone to be profitable with this. Tell me what you guys think. And the craziest part of this strategy is that you can trade it on the 1 second time frame if you follow all these rules properly. You can even trade it on the 5 second, 15, and this works for any time frame really, anything at all. You can even go up to the 1 minute. You can go up to the 1 hour, 15 minute, anything, right? All right. Have a good one, guys.